Ladies and gentlemen, good day and welcome to the Indraprastha Gas Limited Q4 Results Conference Call hosted by Antique Stock Broking. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varatharajan Sivasankaran from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Darwin. Good afternoon, everyone. It's my pleasure to welcome all the participants to this call and the management represented by Mr. Sanjay Kumar, Managing Director, Mr. Pawan Kumar, Director Commercial, Mr. Sanjay Kumar, CFO, and Mr. Manjeet Singh, GM Finance. I would request the management to give their initial remarks and we can move to the Q&A after that. Over to you, Mr. Manjeet.
Thank you. I am Sanjay Kumar, Managing Director, IGL. Very good afternoon to all of you. I presume you would have gone through our financials which were reported on Friday. In this challenging year of very high gas prices and uncertainty in CGD industry, our company has shown the good results and achieved new heights. I feel happy to announce highest ever sales volume of IGL at 2952 million cubic meter for this year, which is 8.09 million cubic meter per day. Highest single day CNG sales of 50.62 lakhs kg in CGD sector. Number of domestic connection installed this year was 3.1 lakh. 81 new CNG stations were commissioned during the year. 298 km of steel pipeline and 3,400 km of MDPE pipeline was laid during the year. And we also had the highest revenue of rupees 15,543 crore achieved during this year and the highest profit after tax of rupees 1,445 crore achieved during the year. You may be knowing that IGL is celebrating its 25th year this year, and IGL has already announced a special dividend of rupees 10 per share during Q4 of FY23. I would now like to invite my Director Commercial Pawan to give his opening remarks.
Thank you and good afternoon everybody. I am Pawan Kumar, Director Commercial. Let me extend a warm welcome to all our investors, analysts, fund houses for taking out time and participating in today's call for Q4 FY23 results of IGL and full year results of 23. IGL has shown a robust growth of 16% in terms of volumes despite the gas pricing going to the roof. This strategy to maintain customer base and keep on increasing the volume. We are focusing on new GAs which we have acquired and will accelerate steel pipeline and CNG network so that natural gas ecosystem is developed well in these geographical areas to help us keeping the growth momentum in future also. As discussed, we have added 81 new CNG stations, out of which approximately 50% have been opened in new geographical areas. I am also very pleased to inform you that there are 791 CNG stations as on 31st March 23 and monthly addition conversion has been in the range of around 40,000 vehicles per month. On the PNG front, I am very happy to inform you that the financial year 22-23, we have added more than 3 lakh new pipe gas connections. We have also added 700 plus new industrial and 900 plus commercial customers. During FY23, we have seen high gas prices. We have always put in our mind the balancing approach for price rise, taking care of both customers' interest and equity holders' interest, and have taken a calibrated approach in passing the additional cost burden. Government of India has also announced the new pricing formula for domestic gas prices, which relates to APM gas prices. As per the new formula, the floor of $4 and ceiling of $6.5 with a moratorium of 2 years, and there will be an increase of 0.25 dollar in the floor price as well as on the cash side also. We are quite sure that with this very positive move from the Government of India will act as a catalyst to increase the demand of natural gas, both for PNG and CNG segments. Further, we are also trying to enter into other areas of diversification and especially in the field of renewable energy. We have entered into one of the MOU with Messrs. ACME for development of green hydrogen and are constantly looking for the new opportunities in the energy space as well as acquiring the stake in other CGD companies. We will come back to you when the projects get materialized. Once again, I thank you all to join this meeting and will be happy to answer all your questions, queries. And now the floor is open for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephones. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Probal Sen from ICICI Securities. Please go ahead.
Thank you very much for the opportunity. Congratulations on a good set of numbers. First question was a bit of a housekeeping one. I wanted to get a sense of what is your gas sourcing mix like currently, in the sense that how much percentage of priority gas are you getting for your CNG and household, and of the balance it is being met by what kind of sources? If you can give us a sense, that would be good.
During the year FY22-23, we got about 89% of our gas, which was APM, non-APM and CBG, and remaining 2% was HPHT. This is the sourcing that we had done, and remaining is LNG.
So when you say RLNG, apologies, is it mostly on spot basis or is it a combination of term plus spot LNG?
See, normally our RLNG procurements are 2/3 term, 1/3 spot.
Okay. And are we likely to maintain that for FY24 as well? Is this the kind of a sourcing that we should be working with for 24 as well? Or can the share of priority reduce from the 89% is what I was trying to ask.
Prabal, actually, the CGD sector is poised for an explosive growth now, because all the entities have been waiting for last 1.5 years to charge new areas, to start many more stations and make more development. So if that happens, and if APM, non-APM pool remains wherever it is today, say 21 million or whatever figure is there per day.
Right.
Then everybody's share of APM, non-APM will go down. And accordingly, everybody will have to increase their sourcing of LNG as well as HTHP gas. So I hope I have answered your question.
Yeah.
We not crystal gaze into it.
Got it. No, that's very clear, sir. The second question is more around the guidance. You mentioned about 81 CNG stations that you added, of which around 40 odd were in the newer GA. Any guidance you would like to give on that same front for 24? What are the plans and what kind of capex are we looking to spend?
FY24 we will have 100 CNG stations, and again 50% of them will be new areas.
And sir, roughly any capex guidance to go along with that, overall or segmental, whatever it is?
1600 crore is our estimated capex.
How much, sir? 1600?
Yeah.
Okay, sir. That's very useful. I'll come back if I have more. Thank you for your answer. Appreciate it.
Thank you.
Thank you. The next question is from the line of Siddharth Chauhan from Batlivala and Karani Securities India Private Limited. Please go ahead.
Yeah, hi. Thank you so much. This is Abhishek from BNK. So, if I look at your EBITDA per SCM numbers, they were a good increase on a QOQ basis, but just marginally below what people were expecting. Is it fair to assume that the benefit of lower spot LNG did not really flow through into this quarter's numbers, and that should come through in the coming quarters. So that's my first question.
Which number you're talking about?
So if I look at your EBITDA per SCM number, it moved from 5.7 to 6.3.
Okay. Yeah. EBITDA was 6.91 in the financial year, and you are right. The benefit of lower price of gas actually started accruing to us only after 9th April. So we hope to have better EBITDA this year, somewhere between 7.5 to 8 rupees per SCM for the financial year 24.
Fair enough. So that's very useful. And my second question is, so one concern which has come in, after the KPC recommendations is that now the CNG prices and margins will have to be uploaded on a portal, and the government will closely monitor it. So is there some concern around there could be a cap on how much the EBITDA per SCM can or how much ROE you can make, and is that a fair concern?
So almost all the entities have reduced the price when this Kirit Parikh committee report was implemented by central government, and let me assure you, almost for every entity, the final margin actually increased that day, even after that reduction. So that is, we can only look at a higher margin now, not the kind of margin like 6.9 rupees per SCM. We will definitely exceed it by more than 50 paisa to 1 rupees.
Fair enough. Fair enough. And last question, by FY25, what percentage of your volumes will be coming outside of Delhi NCR? That's my last question.
Sorry, can you repeat?
Yeah. So by financial year 25, what percentage of your volumes will be coming from outside Delhi NCR?
50% of volume, 60% of the volume will come. 60% of the volume will come from Delhi and surrounding area, and remaining 40% in next 2 years should come from outside GAs.
Okay. Thank you so much. That's my last query. Thank you.
Thank you. We have the next question from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir. First question, sir, all your contracted LNG volumes are restored to the normal level, or these are still at a take or pay level?
Normal level. What he's asking, whether you are getting 100% supply against your term RLNG contracts. Are we getting now? Yes. So we are now getting for last few weeks. It just started.
March last week.
So will it continue?
The volumes have been restored.
Okay, sir. So will it continue for next 1 year, 2 year, or is this a short-term arrangement, and then again it will come back to the take or pay level? Any idea about that?
किसको पता बॉस?
Okay.
चल रहा है अभी भी. आप बता दो कब तक चलेगा. हमारे हिसाब से तो लॉन्ग टर्म कॉन्ट्रैक्ट है. हमने 3-3, 4-4 साल के पुराने मतलब कॉन्ट्रैक्ट किए हैं. So we hope it will continue for full term.
So the question from the point of view of the Gazprom has temporarily started supplying the cargoes to the GAIL, and it was only arrangement for the 1 or 2 months, and so that's why I was asking whether it will it is a resource.
Maybe you will be a part of earnings call of GAIL.
Okay.
We don't have much information about that.
Yeah. Next question,
we hope it will continue for full term.
Okay. So next question again, the shortfall of APM gas for the priority segment. So to fulfill the priority segment demand, are you still blending the HPHT gas which you were getting from the gas exchange, or you have started?
In response to first question, we had answered that for CNG, PNG, the total gas requirement is being met 89% was met during last financial year. 89% of that by APM, non-APM and CBG. That's one pool. Then HTHP gas was 2% and RLNG was 9%.
Okay. And what is the current status, sir? Are you still blending HPHT gas for the priority segment?
It is still the same.
Okay.
Now this year it is increasing now. We are moving towards 5% of HTHP and slightly lower APM, non-APM gas.
Okay. And the last question from my side regarding IGL gas cost again. Can you please share how much gas cost has increased due to the unified gas pipeline tariffs?
It's slightly more than 1 rupees per meter cube. नहीं लाइन चालू है green button. आवाज आ रही है boss?
Yes sir, we are getting.
Okay, so it's slightly more than 1 rupees, 1 rupees 15 paisa or something like that.
Okay, thanks a lot, sir.
Thank you. The next question is from the line of Rajesh Enor from ITI Limited. Please go ahead.
Hello, am I audible?
Yeah, you are.
Thanks for the opportunity, sir. So my question is on volume growth side. What is the kind of volume growth trajectory we are expecting for the coming year, and what will be the drivers for the same? Which segments of sub-segments, let's say, auto, buses, and passenger vehicle. Any light on that?
We are targeting that our growth will be 1 million metric SCM per year. I mean, this year we touched 8.09 SCM per day, and we are targeting 9 plus next year.
And sir, which are the sub-segments, which are the consumer groups which will be driving this growth?
See, first thing is that we are expanding to the new GAs, so we expect a lot of demand will come from there because the conversion rate, our geographies will increase, so more vehicles will be converted in the new GAs, and our new GAs have good potential where the trucks and dumpers, we expect that these will be converted. Secondly, since there is a stability in the prices for 2 years, we expect that the CNG conversion and new vehicle variants which are being launched by OEMs will increase. So we expect that the number of CNG vehicles will increase in times to come. And thirdly, we are aggressively doing the domestic connections. Rather, we are doing the highest number of domestic connections. So, and this NCR being a very high density area, we expect that the growth will continue. Thirdly, there is enough scope of increasing our commercial sales. Basically, the entire NCR is having huge commercial establishments which is a potential available. In fact, whatever LPG is being sold in NCR, that is the potential available for us. So we will maximize commercial sales. Regarding industry also, if the industry is quite price sensitive. So if the gas prices remain stable, so we expect that industrial sale will also go up.
Okay, sir, thanks. And sir, my second question is about the Delhi's bus population or other NCR bus population. Can you please share how many buses are there with BTC and outside private, and how many of them will get replaced? What is the new EV bus expectation, and is there any threat to our volumes or volume growth going forward?
So if you are talking about buses in Delhi, so the total number of CNG buses are approximately 7,500, and EVs, if you are talking about, I think if I'm not wrong, almost 350 EV buses are there in operation as of now. And though Delhi government has elaborate plans of introducing more EV buses, but I think there are some hurdles which are going on currently, and their new tenders I think have not elicited enough response which they were envisaging. So we see that EV buses are a threat to our volume, but it will take some time, and it's not an immediate threat. But of course, in long term, it will have an impact on our sales, buses sales, which is presently around 10% through DTC route.
अच्छा ये जो 7,500 है ना ये this is DTC and DIMS buses. And there are 25,000 more buses, private buses, school buses, etc. So the total is approximately 32,000 in NCR region.
And sir, just on that thing, is the private and the school bus volume also at risk? Because I guess the capital cost is very high. So other than government, nobody is really procuring EV buses. Is my understanding correct?
That is correct.
See, our total buses volume is approximately 20% of our total CNG volume, which if you take it around, it will be 1.2 million cubic meter per day. So out of that, around 10% is DTC DIMS, where this EV threat or perceived threat might be there over a period of next.
In addition to
half
this,
of the total bus volume.
Like Uttarakhand State Road Transport has approached us recently that they are deploying 200 CNG buses, which will operate on Delhi, Dehradun, Delhi, Haridwar.
100 more planned.
And 100 more is planned in the second phase. So we expect that these buses will be taking CNG from our GAs only, because we have the least price. Even vehicles, some fleet owners are there in Haridwar. They take the CNG from Muzaffarnagar areas, which is quite near to Uttarakhand. So long haul buses give a good potential.
Okay, and sir, just one clarification. You said 20% of the CNG volume is buses, and almost half of that is DTC buses. Is that correct?
Yes.
Okay. Thanks a lot, sir. Thank you very much.
Thank you. The next question is from the line of Kirtan Mehta from BOB Capital Markets. Please go ahead.
Thank you, sir, for this opportunity. You mentioned about that the benefit of the lower price has started coming through 9th April only. So what were the reasons so that we couldn't take the benefit of this during the last quarter?
No, it's not that we could not take the benefit. The actual benefit, the appreciable benefit came when this Kirit Parikh committee report was implemented. That is what we meant. There is no other reason, whatever shortfall was there was being sourced from the RLNG kitty as well as HTHP kitty, and those prices were slightly higher. There was this guideline also about the HTHP gas, which was changed on, I think, 17th of January.
Yes.
So after that modality of bidding of HTHP gas also changed.
And Kirtan, if you see our gas cost has come down. If you compare Q3 versus Q4, it has come down by around 2%, which mainly
from 38.5 to 37 rupees, 37.5, something like that.
Right. Understood, sir. In terms of the current quarter, whatever is the shortfall into the priority sector, can we completely fill it from the available HPHT gas, subject to it being cheaper? Or do we still have to rely on the RLNG as well?
No, see, you can't actually rely on any one gas completely, other than APM, non-APM, because APM, non-APM will be cheapest option in real foreseeable future because of $6.50 price. So it's not that, it's quite possible that somebody who has got a lot of HTHP gas may end up paying $12, whereas the market may be at $10. So there has to be a balance, and these are operational things. which we are managing on day-to-day basis.
Right, sir. In terms of today's outside Delhi and the surrounding areas, what is the current volume that we are getting from the outside of Delhi and surrounding areas out of our 8.1 MMSCMD?
Out of 8 plus 1, I think 7 is coming, no?
Yes.
7 is coming from Delhi and surrounding NCR. 4 lakh. 4 lakh is 10%. No, by Delhi and surrounding area, you mean Delhi, Noida, Gautam Budh Nagar, Ghaziabad, and Gurugram included, is it?
Yes, sir. So we are saying that 7 MMSCMD is coming from the Delhi and the surrounding areas, and balance 1 MMSCMD comes from the outside area. Did I understand it correctly, sir?
Yes.
If we say the new geographical areas, including Rewari, around 15% of sale,
15% coming from outside surrounding area as of now. But this will increase because the steel pipelines are being commissioned there, and that will help us in converting these stations in these areas from DBS to online. And the sale will increase there. It will definitely increase by, it will definitely double or more than that next few months.
Right. And earlier we mentioned that out of the sort of the FY25 where we are targeting 10 MMSCMD volume, we expect 40% from the outside GAs. So does the contribution of 1 MMSCMD grow to 4 MMSCMD? Is that you were implying?
That is what we are planning actually. That is what we are planning. We wish we would create, conditions so that we approach more than 3 million sale there, 3.5 million sale there in outside GAs other than these 4 GAs.
Right, sir. Just one more question on in terms of the dumpers, other vehicles and tractors we are planning. So could you sort of highlight the steps that we are taking today and how long would it take to sort of get a momentum on?
So we are working with the transport operators and dumper operator people, and there is one thing is very clear that this price that we presently have is much cheaper than diesel. Actually, last 1 year, the prices went through the roof, and other players, not IGL. Other players increased the price to say 95 rupees or 92 rupees per kg, which actually, has created some problems in those discussions, but we are very sure because we are now able to see stability. By stability, what I mean is there is the market price of gas or the APM, non-APM price of gas will be predictable for next 4-5 years. And that is where we believe that segment, whether it is the dumper or the carrier of this sand and those construction material, road construction material, they are large consumption group presently running on diesel. So, and there already many discussions have happened. We are also trying to see if we can incentivize them with some 2-3 rupees discount in the first year so as to cover up the cost of conversion. These are the steps that we are taking in our GAs in this regard. Thank you.
Thank you, sir.
Thank you. We have the next question from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Good evening and thank you very much. So when you talk about the improvement in margins you expect in FY24, will that be driven by the reduction in your gas cost per cubic meter? Because you have already seen your CNG prices being cut from 79 to 73. So is that entire benefit in terms of the per unit margin going to be the result of your cost per CM coming down by that 4501 rupee?
Rameshji, the cost of gas of IGL, the total cost of gas average of IGL in the year 21-22 was, I remember, 17 rupees per SCM.
Yeah.
And last financial year it was about 35-36 rupees per SCM or 37 rupees, something like that.
Okay.
So it almost doubled, you see. Now we, the law of nature says that we will probably go back to 17 rupees this year, which will not happen. But we definitely expect it to be below, 28 rupees or 27 rupees, something like that. Maybe even approaching 25 rupees per SCM during this year. This is what gives us the belief that we will be able to maintain margin of 8 rupees, this EBITDA 8 rupees per SCM, or go to 9 rupees next financial year. That is the kind of thinking that the management has in this company.
So does that mean that we will see further reduction in the pump price for CNG?
No, I never said that. What I said is, if the gas cost goes down, the gas cost was rupees 17 per SCM in the year 21-22. It was more than 35 in the year 22-23. Today we are at about 28 rupees. We believe it can further go down, during the year.
No, the reason why I'm asking that is, sir, if you look at 4Q23, your average realization, was about 49 points, including PNG. Your gas cost was 37.6. So if you're talking about gas cost coming down by, 10 rupees, then your price has to come down, right? That is because we should look at the fourth quarter number. And while I appreciate that on an yearly basis, you will look at the average, but in terms of the price revision, you will look at the current prices, right? So I'm just trying to get a perspective in terms of whether the entire increase in EBITDA per SCM is from the reduction in gas cost, or there is a combination of, the overall, reduction in gas cost and the ability to pass on some of that benefit further. So that is the basic rationale for my question. So I get your point. So you're saying that on a net basis, you will be able to improve your margin. The second thought is, if you're looking at your new GAs, current share is about 15% of sales. It's about 1.2 MMSCMD. So if you're looking at 40%, if you're targeting, say, 10 million cubic meters in FY25, you're talking about 4 million from the new GAs. Is that number correct?
No, that is, the planning we have. How much we can achieve, we will see that. During the year, we'll come to know. As our steel pipelines are commissioned, maybe when we have an earning call after 2 more quarters, it will be more clear. Because by then, half of the planned growth would have come up already. On the first issue that you referred, I would like to go back there, because what you are telling that whether you will pass on the price increase, there is no need to pass on the price increase. For increasing EBITDA, we don't need to increase the price because we are, very much within the, T-off range with T-off range of the petrol and diesel price, which means that we don't have, say, 35% margin from that price, petrol and diesel price. But we are more focused on the other aspect, which is the mother of margin, which is that the cost of gas was 17 rupees, has been 35 rupees, should go back to 25 rupees, something like that. This is what I have been telling you.
Yeah, understood. I was not talking about price increase. I was talking about prices being reduced, but you will retain some of the benefit. That's how you make money in this business, right? So you can take it offline. So the next thought is, if you're looking at your capex, this year it was 1100 crores. So next year you're planning 1500 crores. So by the end of FY24, what is the kind of capitalization you have achieved in percentage terms in the new GA? It will be 60-70%. And when will you fully capitalize the proposed, infrastructure in the new GAs?
Can you please come again? Can you repeat the question,
If
please?
you're looking at your capex in the new GAs and the capitalization in terms of addition to your gross block, so this year in FY23 you spent 1100 crores. You said you're going to increase that capex to 1600 crores in FY24. So just to get a sense in terms of what is the timeline for getting the full infrastructure in place, how much of this additional capex you will capitalize in FY24, and what is the capex you would require, say, for FY25 and 26 in terms of the investment on the ground, and what is the kind of capitalization in percentage terms of addition to the gross block over the next 2 years?
See, the capex is an ongoing activity, and capitalization as well as increase in CWIP, both we are considering towards the amount spent during the year, and accordingly we report also. So the last year's number was around 1190. This year we are planning approximately 1600 crores of capex, mostly broadly consisting of 50% of the same going towards the existing NCR region, and remaining 50% towards the new GAs which we have. In terms of capitalization, it's more or less, I think, almost 70-75% of the amount we capitalize out of this.
Okay, so the growth in new GAs you're talking about will be...
Sorry to interrupt. We request you to please rejoin the queue for further questions.
Okay.
Thank you. The next question is from the line of Mayank Maheshwari from Morgan Stanley. Please go ahead.
Thank you for the call, sir. 2 questions from my end. Firstly was in terms of your long-term sourcing of gas, you talked about how you want to grow your volumes. Can you just talk about your thought process around the long-term sourcing and how you're trying to kind of secure those growth?
See, from the sourcing point of view, presently we are getting around 87% through APM, and around 5% last quarter, if we talk about, around 5% was through HPHT gas, and remaining around 8%, 5% was through spot purchases, and 5% was through our long-term contracts, and 3% was through our spot purchases. So going forward, if we talk about the volume growth, last year most of our contracts were not getting us the full quantity, and it was restricted at supply or pay level, which now has come back to its normalcy, and we are getting the full quantity. Given further that HPHT gas has also been given on priority allocation to CGD industry, so that gives us another pool. So both put together, we are confident that we'll be able to source all the gas. The option of entering into long-term contract also now seems to be viable because the international prices have come down. So that gives us another avenue to source gases going forward. And depending upon how much growth is there and what volume we require, we'll take a call on that.
So right now, is there a thinking process to kind of say, let's use the LNG markets, what we are seeing today, to kind of capitalize and try to get long-term sourcing of gas on that front?
So I think the time has, I think, started now that we start thinking on additional long-term contracts. We are evaluating and will take suitable call. We had gone for some small quantity during last month, but that was just to test the market, and we'll take a call for that.
Got it. So, sir, the second question was more related to your comments earlier regarding acquisitions of city gas companies. Can you just walk us through the thought process around that, and what are you kind of thinking when you're looking at now the new GAs for inorganic growth?
New GAs, that's more of a strategic and confidential discussion. We can only come to you once we have concluded anything. As of now, you may be aware that we made efforts in 2-3 cases, and we could not get through because these are basically bidding.
Got it, sir. I wanted to just understand the bigger picture around what are the kind of criteria we are looking at when you're looking at some of these geographies.
No, whenever somebody is selling, they want, kind of 25% return on their investment, CAGR. Whereas that much business potential should be there in that geographical area, isn't it? So it's basically, it comes down to the Excel sheet, boss.
Okay.
Yeah.
So are you targeting somewhere returns very close to what you're kind of making, or kind of potential growth is what you're looking for? Like, what are you kind of thinking process?
Both. For some people, growth may be very important. For us, we've got, a lot of new areas where we can do a lot of job. We can set up many CNG stations. We can set up many, we can target many industrial and commercial customers. And thereby the growth can come. We have not yet hit the plateau in terms of volume growth.
Got it. Okay. No, that's fair. Thank you.
Thank you. The next question is from the line of Vishnu Kumar from Parth Capital. Please go ahead.
Yeah. Thanks for your time, sir. Sir, firstly, just wanted to understand, there are too many moving parts in terms of pricing, we understand. But what would be a net spread that, in your opinion, will be a number which you will be comfortable with between petrol and, say, CNG?
20% should be maintained. 20% is required for conversion to continue between diesel and CNG price. Petrol and CNG price. 25%. No. He's asking about spread. So I believe you are comparing liter, rupees per liter with rupees per kg.
Simple kg. From a customer mind, that's what they look at, right? Petrol per liter and minus CNG.
20 to 25% spread is necessary. We believe that.
That will equal to about 20 rupees per absolute spread, liter minus kg.
See, when we talk about efficiency, we see both mileage and the price. So if you see last quarter or till before the last price reduction, the gap was around 25%, and after the reduction, it is, and I think with that gap also, we maintained a conversion of approximately 13,000, 14,000 vehicles per month. Given that we have reduced the prices and the gap has now reached around 25%, we foresee a significant jump in the conversion numbers. And I think this 25% which is there should be reasonable enough for the growth of CNG vehicles.
If we see the total, savings in CNG with respect to petrol and diesel, even on current rates, considering the fuel cost, mileage, per kilometer per unit, running cost, distance, etc., it is 46% cheaper than petrol and 26% cheaper than diesel.
And this is based on Delhi price, which is the cheapest in the country.
No, agreed, sir. Basically, the point is we understand this fuel efficiency all boils down to an absolute point that could be, based on what you're saying, is 96 rupees and petrol and Delhi are about 74. So about 20 to 23 rupees price spread is giving you about 40% of savings. Now the question is the other regions, the newer areas that we are entered into, UP petrol price is about 96, whereas we are seeing that the CNG price is about 84. So the absolute spread is actually much lower for a consumer there compared to Delhi, especially at the time when we are putting a lot of additional investments there. Given that the saving for a customer is lower there, what is it that we are doing, or how do you convince the customer to kind of take more volumes? Because it appears absolute spread is only 10 to 12 rupees in those areas. Let's say for Kanpur or a Fatehpur, or let's say even a Karnal or a Rewari, the price is absolutely much lower than the Delhi spread.
So these GAs actually present sale is basically done, largely being done through lot of stations where the cost of transporting gas through commercial vehicles also adds up. So, we are trying to address that, and we'll be able to mitigate this cost factor during this year to a large extent.
This will be across, sir, because if, let's say you are putting in a highway that it says 100 kilometers from Delhi, you can't be putting pipeline across, or we'll put a pipeline so that that cost comes down. How should we look at the decision point between sending a daughter booster or a main station?
No, this is an ongoing exercise actually. You see, in any case, most stations largely they are set up on DBS mode in the beginning. Okay. And as the steel pipeline reaches there, it is converted into online. This is what we have been doing for years. So in the same way, see, we've got commitments to start CNG station as per PNGRB minimum program.
Correct.
So there we have to show it through DBS, and then we convert it to online. When we start online, the cost of servicing customer goes down by about 15 rupees per kg. So that is how the sale will come, the pricing will go down, the customers will convert, and all those things that we are planning is basically because of that kind of effect which will add up to the critical mass for the company in new GAs.
Understood. Got it. So in terms of total capex, let's say ex-Delhi NCR, how much will we be doing? What we have invested now over the next 3-4 years, what will be the total quantum that we'll be investing there? Ex-Delhi NCR.
Can you repeat the question, please?
No, ex-Delhi NCR market, which is the surrounding market, the new areas, what will be the total quantum that we have invested till now, and let's say the next 3-4 years, what will be the total quantum that we'll be investing in new areas?
See, approximately, if I tell you around 2,000 crore is what we have spent in GAs other than NCR region.
And how much will we be spending on the next 3-4 years?
How much will we be spending during?
Next 3-4 years, how much will we be spending, the quantum?
The quantum, I think it will be next 3-4 years should be a similar amount of 2,000, approximately 2,000 crores.
50% of capex will happen in new areas from now on. So we are planning, targeting capex of 1600 odd crores. So about 800, 825 crore, 850 crores should come from new GAs. Should come in new GAs.
Understood. So 1600 will continue, 1500 will continue. So next will be a connected question. I'll just close it. It's 1500, 1600 will connect.
We have only 10 more minutes. So
this only, sir. I was just asking 3 years this capex will continue. That's all my question. Thank you.
Yes, similar level of capex will continue for 3-4 years at least, around 1500 crores odd every year.
Okay, sir. Thank you. All the best.
Thank you. The next question is from the line of Rishabh Sisodia from Samiksha Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. Most of my questions have been answered, just a small ones. So on the dividend payout, obviously we have had after 25 because of completing 25 years, we have had a huge dividend payout this year. Going forward, still staying with the 25% payout rate.
We missed your question at the end.
Your audio is not very clear, please.
You were talking about dividend. Can you please repeat your question?
Sir, am I audible now?
Yes,
please. So on the dividend payout, should we see 15 or 20 payout ratio?
आवाज नहीं आ रही है आपकी. Can you please come back in the queue because your voice is breaking.
Okay.
Issue.
On this question, our average payout ratio is around 25%. This year, we had a special dividend of 10 rupees per share, around 500%, including one more dividend which we had given of 3 rupees. So this year being 25th year of our operation, we had given one-time kind of special dividend. And going forward, the dividend ratio, payout ratio would continue approximately around 25 to 30%.
Thank you. We will move to the next question from the line of Ashutosh Parashar from Mirabilis Investment Trust. Please go ahead.
Yeah, hi. Vipin Goel this side. So, sir, I have some bookkeeping questions. So, first one is that in the other financial liabilities in the balance sheet, last year we had this 1,700 crores of amount which had like risen to 2,700 crores this quarter. I believe large part of this was the security deposits related to the PNG connection. So last year that number was 1,000 crores. Can you provide me with the number this year of this 2,700 crores? How much would be the security deposits?
It is approximately 1,200 crores.
1,200 crores. Okay. Okay. And sir, then one thing which we notice is that like this has been there for a while, but then if we just like kind of touch upon this topic again, that the PNG connections have in the last 7-8 years have kind of have from 6 lakh have gone to 24 lakhs, but then consequently the throughput has not risen up to that level. So 144 SCM per connection to some 90 SCM is that what has come down to. So is it because largely the speed of us installing new connections is faster than conversion? Is it that one reason, or is there something else which we should be looking at?
You're talking about the domestic connection or what?
Yes, the domestic connection, correct.
See, domestic connection, as we are, increasing the number of customers, so there might be some time gap in gasifying. Like one housing complex, when it gets ready, 1,000 people apply for the connection, and as and when they move in the society or the housing complex, they get the gas charge. So that may vary from territory to territory. If there is a housing society which is ready and we are charging it, then the immediate consumption will come. But NCR having a lot of new projects which are getting ready in Noida, Greater Noida, Gurgaon, Ghaziabad. So the connections are largely coming from the new societies where moving in takes place. Like over a period of 1 year, 2 years, people move into the housing complexes. That's why you might be noticing some variation in the gas consumption also.
Okay. Sir, how do we plan this, the PNG connections? And this year we added 3 lakhs, last year we had 3.7 lakhs. So what's our guidance on that, the additions in the next 3-4 years?
Addition for the next year or what?
For the next year and then the 2 to 3 years post.
Almost similar numbers.
Similar numbers.
Yeah.
Okay. And then so just one last thing is again in the presentation, and this is regarding the presentation in FY22 year end, we had restated this number on auto and LGVs. So it had restated from 3.5 lakh vehicles to 5.5 lakh. So was it some category change, or like what was there a major bump up because of certain things? So in just clear.
You're talking about the 3-wheelers or what?
The vehicle conversion, the vehicle numbers that we report in the presentation.
Okay.
The number of vehicles, you are talking about the investor presentation which we have uploaded there, you are talking about that?
Yeah. So that as of now, there's buses, there's cars, and there's auto. In the auto LGV segment, the number had gone up from 3.5 lakh in the last quarter, in the last year, FY22, to 5.5 lakh.
No, so presently, if we talk about number of vehicles, CNG vehicles in 3-wheeler and LCVs and RTV segment, that number is 3.74 lakhs. We'll check about what you are referring to. We'll check that.
Currently, 3.754 lakhs. Okay.
3.75 is the number of CNG vehicles, CNG tempos, RTVs and LCVs, that category.
Okay.
Thank you.
Thank you.
The next question is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good afternoon, sir. So, few bookkeeping questions from my side also. So what was the CNG volumes in kg terms for Q4 as well as for FY23?
You're talking about per day sale?
Yeah, I mean total, I mean in million kgs.
So it was around 4.5 million kgs during last quarter, Q4. 4.5 million kgs. 4.5 million kgs.
4.5, and for the full year?
For the full year also, it is around 4.14 million.
I will give you the exact figure. Yeah. Average sale in Q4 last year was 44.51 lakh per kg. Okay? And for the entire year was 44.44 lakh per kg per day.
So Q4 was 44.41.
44.51 Q4, okay. And Q3 was 44.44.
44.44 was Q3. Okay, so yeah. This is lakh kg per day for the quarter, right?
Yeah.
Okay. Okay. And sir, secondly, what would be your volume breakup, this 8.1 MMSCMD between, say, Delhi, Noida, Ghaziabad and Gurgaon, and probably Rewari? I mean, within the NCR, how it is divided?
Delhi is 65%.
Delhi 65%, okay.
Is 20%. Haryana is approximately, I think, 5%, and rest is natural gas, the quantity which we sell to Haryana City Gas and Adani.
Okay, and how do you see this order? I mean, in terms of this Faridabad and Gurgaon. So what do you think you have lost? What do you think you have gained? And what is the current volume versus potential?
We are challenging that order, and we don't agree with that subsidies.
We are still evaluating it, and we'll take a call on that. We are studying it further, and we'll see.
But there's a sunset clause, right? For September, it has to be over, or it can still continue beyond September also?
No, so that's the Supreme Court's order or Supreme Court mandated quantity, which was which we were giving, which we are still giving to them. That will come to an end by September in any case because of the Supreme Court's order. And with the recent letter from PNGRB, which we are still studying and will take a suitable call on that. Depending upon what we decide on that, the volume which we are giving them presently will depend on that decision.
Okay, sir. Last question, in terms of acquisition, you would be seeking management control, right? It will not be like a 20%, 25% stake, just financial investment, it won't be, right? If you're looking for some acquisition of some other CGD?
This is not an investment. This is central government authorization of that GA.
No, I'm talking about normal acquisition. If you're looking to buy some, say, like MGL bought one CGD. So if you're looking to buy some other place.
We would like to have management control so that we can we have some synergy between what we do presently and what we buy.
So you want to be operators, not just financial investors.
This is our core competence. So we would like to be fully in charge rather than a financial investor.
Right, sir. Thank you so much and all the best. Yeah.
Thank you. The next question is from the line of Saurabh Handa from Citigroup. Please go ahead.
Yeah, thank you for the opportunity. So my first question was on the proposed EV policy of the Delhi government for aggregator vehicles. Some, I think, press reports were suggesting that they plan to finalize it in the coming few weeks. Could you talk us through what is the potential implication this could have? What percentage of your CNG volumes currently come from this segment of vehicles?
You're talking about cars or you're talking about buses?
So I'm talking about the EV policy for aggregators and the delivery vehicles. Yeah, the delivery vehicles and the aggregator cabs.
See, presently our total sales to taxis and autos, that category is 40%. The detailed breakup within that of what is how much is autos and how much is taxis is not available, or it is very difficult to ascertain that number. But given that policy, any policy which mandates people to move to EVs, will have an impact first on petrol and diesel vehicles and then maybe on CNG. So from that perspective, there might be some impact. Quantification would be very premature at this point of time. And though we accept that there might be impact, but how fast it impacts our sales, we'll have to wait and watch. And then being a policy decision, there is very little we can do, but of course we are mindful of that.
No. So we are also working now, taking that cue. We are also working on, I think 75 are now firm. 75 we are working, and 25 more and 100 more. So in total, in next 1.5 year time frame, we may have about 200 charging stations actually of IGL in the city.
So, but what would be your revenue model for this charging? How would that work? These would be in partnership with some power company?
The gentleman who handles that, we have not called him in this thing. So Sanjay Kumar, CFO, will take this up with you, Saurabh, on one-on-one basis.
Presently, this is a very fluid.
But आप एक बार उससे बात करा देना इसकी सौरभ से, ठीक है?
So it's still evolving, and then we'll once this model stabilizes, then we can maybe comment few more. These are still early days in this segment. So
okay, fair
we'll come back with more details on this.
सौरभ आपसे बात करेंगे इसके बारे में, ठीक है, हमारे लोग.
Sure, sir. And sir, just a follow-up question on the Gurgaon Faridabad ruling. So just to clarify, you are looking to appeal against this order. It's something which you believe should have gone fully in your favor, and it hasn't. I mean, can you just give some more color on that?
We are studying the order of PNGRB.
Okay.
And we will take appropriate decision shortly.
Okay. Okay, sir. Fine. Thank you so much.
Thank you.
Thank you. The next question is from the line of Gagan Dixit from Ilana Capital.
Can we have the last question? This being, can we take this as a last question?
Sure, sir. This will be the last question, ladies and gentlemen. Mr. Dixit, your line has been unmuted. You may proceed with your question.
Yeah, thanks. Thanks for taking my question, sir. Sir, my question is, if LNG prices, international LNG prices remain at, let's say, for $12 to $15 for next 2-3 quarters, so is there still any provision of a cut in the CNG prices by another 4-5 rupees, assuming that you can maintain the 10.5 to 8 rupees EBITDA per SCM? That's my first question.
The LNG prices remain between 12 to 15. As I heard you correctly, there is no scope of cutting the price of CNG.
Okay, sir. Okay. And sir, what are the GAs which you see that still need to be that can witness that strong, volume growth on the taxis and auto side? It need to be, if you can connect more CNG stations there. I'm assuming that Delhi NCR is relatively the mature market, but still, which GAs you see which have lots of potential?
See, particularly Western UP. This Meerut, Muzaffarnagar, Hapur, Shamli, then Haryana, Karnal, Kaithal. These are the areas where huge population density is there and huge paying capacity is there. This is primarily sugar cane belt where people have deep pockets. So as we lay the network and conversion takes place, we expect the huge volume from these areas.
Okay, sir. Okay. And sir, what is the still overall true potential of the NCR region for the industrial demand? Industrial PNG demand, or is it peaked? In your sense.
See, my whatever is the consumption of the competitive fuels. That is the potential available. And in NCR, the non-polluting fuels are allowed. So we take our competition with LPG and propane, mostly in biofuels. But propane and LPG demand, you can just seek some data. That is the potential available.
Okay, sir. Okay, sir. My final question is about your long-term contracts. So what are you presently the long-term and medium-term contracts in place? If you can indicate some volume, what are the volumes that you have at present with the time?
We are getting repeat of our earlier contracts. These are being discussed. Whatever is the RAS gas formula or whatever is the Henry Hub related formula which were signed in the year 2020 and 21. Similar options are emerging. Although IGL as such is sufficiently sourced company as of now. And as my team had indicated to you a few minutes ago, I think half an hour ago, we are taking appropriate call on that subject.
Okay, sir. Okay. Yeah, that's from my side. Thank you, sir.
Thank you so much. Thank you, Varadarajanji.
Thank you. I would now like to hand the conference over to Mr. Varadarajan Sivasankaran for closing comments. Over to you, sir.
Yeah. Thank you, Darwin. So if I just squeeze in one last small question, is it okay?
Okay.
So this midterm contract, you have Henry Hub plus oil link contract. If you have a split between the two, is it more like 50-50 or is it more Henry Hub link or more oil link?
In our case, it is more Henry Hub.
It's around 1 million is approximately linked to Henry Hub, and around 1.1 million is linked to crude.
So,
50-50 almost.
50-50. So, but I would like to inform my investors that first time IGL has taken a call by going for a hedging kind of service from one of the RLNG supplier, and we have been able to fix the price of very little volume, I think about 50,000 cubic meter only per day. But that's the beginning we have made, wherein we have taken this fixed price of Henry Hub linked RLNG for the full financial year, from 1st of April 2023 to 31st of March 2024. This is one particular strategic, decision that we have taken, the management of IGL has taken, which we believe will actually improve our, profitability and the visibility of profitability that you may be looking for, the investors may be looking for. Just wanted to inform you as a last point from our side.
Perfect, sir. I wish to thank all the participants for taking time out to join this call and the IGL management for a stretched call and giving out all the details which the investors that are requested. Thanks everyone and have a nice day.
Thank you so much.
Thank you. Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us. You may now disconnect your lines.